developed the curriculum finance program for which is actually taught in Australian MBA colleges. Maybe to mention a few, that is Royal Melbourne Institute of Technology and Deucer Global School of Business and Insight Academy of Entrepreneurs. He has served as the National Treasurer of Professional Speakers Australia between 2018 to 21 and is an active Rotarian. He is a proud owner of 6 failed startup ventures, is what he says. He's proud to have failed so many times. So it prompted him to find out the reason why it happened so. And this made him interview hundreds of entrepreneurs, CFOs, and financial gurus. That made him understand the practical challenges faced by them on a daily basis. He now offers a unique software tool through his new venture, Beehive Analytics Private Limited, that is exclusively developed to assist the top decision makers to make informed, profitable business decisions based on facts and not mere assumptions. Chinmay is the author of this Fundamentals of Financial Statement, which is an Amazon's bestseller, and which is also, which I'm having fun reading. This is what I can say, which is really in very, very simple language, and especially for a person like me who is not from a financial background, it gives a glimpse or idea of how to read the financial statements and to know, especially for you who are going to start a business and becoming entrepreneurs. It's very important to know what is finance is all about and the terminologies that you are familiar when you talk to an accountant or an auditor. It's very important that you understand this. So over to you. Let's welcome Chinmay Ananda, and over to you, Mr. Chinmay.
Thank you, Asita Devangi, for not only for the introduction, but also mentioning about my book. It's good to know that there is someone out there who is reading the book where we are in times of Facebook, where the actual book is something that people may not read, but it's good to know that you're reading it. Apart from Asita Devangi, I can see JP sir, who has got the video on. Hello, JP sir. Good afternoon.
Yeah. Good afternoon.
I would request other participants, if you are comfortable, please switch on the video camera. It's good to see some faces on the other side.
I would also like to welcome Madhurani Gowda, and also I think Shravan, Mr. Shravan is there. I would like to acknowledge his presence. If there's any juries, any other, Mr. Umesh, if you can just let me inform me, please, if I missed out anybody, mentioning anybody. I think that's it. Please catch up.
Okay.
Someone wants your the name of your book. I want you to repeat again, Chinmay.
Okay, this is the book. Okay.
And the wordings are not visible.
Yeah. Okay.
Chinmay, you repeat and start with your book only.
Yeah. Fundamentals of Financial Statements. Fundamentals of Financial Statements.
Now, I think on Amazon, it's priced pretty high. I think 500 or 1,000 rupees. If you want, I think you can contact Umesh sir, and he can pass on my number. I've got around a few hundred copies here with me. I'll be happy to I think we are giving it for 300 rupees. Anyway, I didn't mean to start my presentation selling my book, but hey, that's marketing, right? Anyway, having said that, see, when it comes to this thing called finance, even Asita Devangi mentioned that for someone like me who doesn't have finance background, I find it challenging. And there is a lot of misconception. And many people ask me, Chinmay, why should I be bothered about understanding numbers when we have an accountant, when we have all this accounting software? Why should I be bothered? I'm a very creative person. I'm a very technical person. Now, let us take a step back. I'm sure Umesh sir has sent you the email and probably reminders on WhatsApp and other medium to communicate, saying that we are going to have this knowledge session on 12th of August, 12 numbers. It starts at 2:30 numbers. Sanjeev sir will be speaking for 60 minutes numbers. And I can see on all the windows here on Zoom, you have got these BP 136, 47, 196, 18, 144 numbers. Now I am wearing specs. Asita Devangi is wearing specs. JP sir is wearing specs. I see some photo BP 11. Even he is wearing specs. So we know the power of a glass. Numbers. As we are speaking, there is a cricket match being played. I just quickly checked. England has won the toss and India will be batting. How will we know who's winning or losing? By looking at scoreboard, which is numbers. The food we eat. Someone has calculated the calories, vitamins, and then we know accordingly which is good for our body. Numbers. And again, all of you are preparing this business plan competition to get that prize money, numbers. So I would like to make a profound statement, and I would like you to make a note of it or remember it. Almost every decision that we make in our life is directly or indirectly related to numbers. I repeat, almost every decision we make in our life is directly or indirectly related to numbers. However, when it comes to business, for some reason, this is where we say, I'm a non-finance person, and we think it is a job of an accountant or someone who has got finance experience. And we say, I'm an engineer or I'm a technical person, and we try to look away from those numbers. So in today's session, I want to break that misconception. I want to make sure that you understand the basics. And of course, I would like to make sure that we have some fun along with it as we are learning the subject of finance. And this is where people go, Chinmay, how can finance and fun be on the same sentence? Well, that's the title of my book, Fun, Fundamentals of Financial Statements. Now, being born and brought up in India, I'm sure that you have played cricket, or you've definitely watched it, or at least you know the game that I'm talking about. So let us try to understand the basics or try to understand finance by comparing it with the game of cricket. Now, what is the aim of the game in cricket? A team will make sure that they will score more runs than the opponent. That's the aim of the game. In business, aim of the game is to make sure it is making more money than it is spending. In cricket, whenever a bowler is bowling, when a batsman is scoring, there is someone who is recording all those actions, right? What do we call that person? Now, again, this will be an interactive session. So feel free to type it in the chat box. I'm not sure if you can unmute yourself. If you can, then yeah, feel free to do so. I would like to keep this interactive. So coming back to the question that I asked. So what do we call that person who is recording all the runs, all the balls that is getting bowled by the bowler? What do we call that person in the game of cricket? You can type it in the chat box. You can unmute yourself.
Mr. Umesh, they can unmute, right?
Zaid is saying cameraman. Really, cameraman, is he recording the runs? What do we call that person who is recording the runs, the balls, or pretty much whatever the action that's happening? And if you have played cricket, probably in your college, there is this book. I don't know whether people still use it, where you score and scratch each and every run as and when the batsman is scoring.
Sir, is it scorers?
Yes. So Setu, that's the word I was looking for. Well, umpire doesn't really keep the score, but pretty much the umpire is saying, hey, this is how the game is supposed to be played. So in the game of cricket, there is a person called scorer who is recording all the runs and balls that are being played. Now, in business, there are some actions that are happening. And this is where people go, oh, no, in business, there's so much of financial transaction that will happen. There's so many things that's happening. We don't know where to start. So this is where, let me break that misconception. If there is one thing that I would like all of you to take away from this session is what I'm going to say next. Please make a note of it, write it down. When it comes to finance, Whether it is a small business, medium business, startup, million or billion-dollar business, there are only four things that can happen from finance perspective. Ready? Money comes in, duddu bantu. Money goes out, duddu hoitu. Money supposed to come in, duddu barbeku. Money supposed to go out, duddu hogbeku. Mugitaste. These are the only four types of financial transaction that can happen in any business. Money comes in, goes out, supposed to come in, supposed to go out. Whenever one of these financial transactions happen, it has to be recorded. Ivaga business alli, a person is recording this. What do you think is the name of that person? What is the technical name given to that person who is recording all this financial transaction? Again, no, feel free to unmute yourself or you can type it in the chat box.
Is it accountant, sir?
Okay, BP165 is saying one. Is it accountant? Well, it is not really accountant. Asita Devangi, probably that is not the email that I wanted you to share. That's my personal email.
Okay.
You can share my business one. Anyway, so in fact, in India, we call them as accountants, but the technical name is called as bookkeeper. I very rarely come across people in India who use this term. We call people who are recording or people who know how to use Tally as accountant. But the technical word is bookkeeper. They are keeping the books. Now, just ask yourself, in the game of football, if the scorer, or in the game of cricket, if the scorer is not recording the runs properly, if the scoreboard is not up to date, will we know who's winning or losing? Same thing in business. When the financial transactions are not recorded, how will we know whether a business or a startup is making more money than it is spending, whether it is profitable or not? So this is one of the fundamental basic mistakes that I see in a lot of startups and small businesses. That is, they do not have the latest numbers, or they do not record most of the financial transaction. Either it will be in their head or they'll write it in some piece of paper or some Excel file, and you ask them, pretty much it's all over the place. So if you do not know the scoreboard, then how do you know the decisions that you're busy making is going to help you win? Now let's go back to cricket. In the game of cricket, there is someone called as an umpire. Now, what is the role of an umpire? To make sure everyone follows the rules and a fair game is played. This role in business, to a great extent, is played by accountant. Count. They count the financial transactions and they make sure your business, your startup, will abide by the rules and regulations set by the taxation office. Now, have you ever seen a batsman or a bowler going and walking up to the umpire and asking, hey, how should I go about bowling the next ball? How should I go about playing the next shot? Should I take a single? Should I hit a four? Then why is that in business we think we should always be over-dependent or dependent on accountants to tell us how to make financial decisions? In fact, this is now, as Sanjeev sir said, sales starts when marketing ends. He also mentioned finance starts when accounting ends. This is where we have to understand finance and accounting are two different things. They are not the same. Accounting is more about keeping records of all of this and making sure that your business is compliant and it follows all the rules and regulations set by the taxation office. After you get those numbers, the decision that you're going to make is more about finance. So let me elaborate more on this. Now, of course, I'm not sure if Shravan is still here, because most of the chartered accountants, whenever I share this, they go, no, Chinmay, you can't call us as umpires, because we don't just do a typical accountant's job. We also give them advice. We also help them in financial planning. We also help them with consulting. Now I tell them, yes, I get it. So this is where even we as a startup founder, we should know when we are approaching an accountant. Are we expecting an accountant to do a bookkeeper's job? Are we expecting our accountant to do the compliance work? Or Are we also expecting our accountant to give us financial advice, financial planning, or play a role of a CFO, Chief Financial Officer? So we need to be very clear. What is that we want to avail? What kind of service we want from them? Now back to cricket. Before the bowler bowls, before the batsman is going to play the shot, they know the score, they know the situation, which means they know the numbers, and accordingly they will play the game so that it is going to help them win. Same thing in business. When we are making that business decision, do we know how the decision is going to impact the bottom line, which is profit? And this is what finance is all about. So whenever from now on you are going to make a decision in your startup, ask yourself, how will this decision going to impact the bottom line? And this is what finance is all about. Or are you always dependent on someone else to tell you what the score is and tell you if you make this decision, that is what going to happen? I'm not saying you should not ask for suggestion. I'm not saying you should not ask for opinion. All I'm saying is don't be over dependent. Don't be so ignorant and say that ignorance is bliss. No, when it comes to finance, ignorance is sick. You have to make sure that you understand those basic numbers. Otherwise, it's like you're just hitting the ball and hoping that it is going to help you win the game. Back to cricket. A team wants to be on the winning streak. They want to win the championship. Probably they want to win the World Cup. Same thing in business. We don't start a business to make profit once. We want the business or a startup to be profitable. When I was going through quite a few of the business plan, and also I was at the FKCCI office last week, going through the pitch that was given. And then I found that most of them, it was not a business plan. It was more like a project plan. I mean, of course, you're all selected, but most of the time we had to reject because it was more of a project rather than a business. A business is something that is kind of ongoing and it is profitable. So now the question is, if a business has to be profitable, how are we playing the game so that we are always on that winning streak? We are always ahead of it. Then finally, it is all about knowing where do we want our startup to be or our business to be 3 months from now, 6 months from now, 1 year from now. To know where the business needs to be, we need to understand where are we right now. Now, if you want to go from one place to another, I'm sure most of you will enter it on Google Maps. So what is the first thing it will say? You are here. And then it will say for you to go from here to there, it will take 30 minutes, 45 minutes, whatever, and it will give you a route. So same thing for us to know where we want to go or where we want the startup to be in the next 3 months or 6 months or 1 year. First, we need to know where are we. And many a times we are always communicating where we are only from sales, revenue perspective. I'm sure you might have heard people saying, oh, this business makes 10 lakhs turnover, 1 crore turnover, 10 crores turnover. Please remember, business is not just about turnover. It is more about leftover. It is not just about how much you make. It is more about how much you keep. So when we say here, we have to understand here from PBT, profit before tax perspective. And we'll be understanding this term in detail when we go through the profit and loss statement in the next probably 20-25 minutes. So first thing is to know where are we from finance perspective. So once we know, oh, okay, this is where we are. Now, some of you might be thinking, but we are a startup. Nothing has happened much. We haven't generated any revenue. So we are kind of zero. Okay, great. You're starting here. And this is where you have to kind of look out for other competitors in the market. What is that they have done? In 3 months, where did they reach? In 6 months, where did they reach? And accordingly work backwards. For example, let's say you have never been to Mysore. And let's say you are in Bangalore. And if you want to go to Mysore, and if you haven't been there, what is the first thing you will do? You'll probably ask someone who's already been there, right? And then, hey, how is the roads now with all this lockdown and so on and so forth? Then accordingly, you'll get those information and then you make those decisions. Let me leave at 6 o'clock in the morning or 7 o'clock, or instead of driving there, let me go by bus or train. Again, you're looking at numbers and making decisions. Same thing. Even if you are a startup with zero revenue, this is where every jury member is encouraging you to do research, search, research, and understand what's happening. Now, once we know we are here, the next thing is to know, why are we still here? How did we get here in the first place? This is where we have to understand what happened. Again, you may not have a lot of numbers to look back because you might still be in the planning stage. Again, you have to do some research. And finally, we are here, we want to go there. There shouldn't be saying that, you know what, 6 months from now or 1 year from now, we'll be making 50 lakhs turnover. Okay, fine. That's one way of measuring a business. But how is it going to impact the bottom line? You should be aware of it as well. So we are here, we want to go there. The obvious question is how? This is where all your strategies, ideas will come into picture. So if I want to go from Bangalore to Mysore, will I drive? Will I take a bus? Will I take a train? Same thing. We are here making zero revenue. We want to go there probably 1 month from now, 3 months from now, 6 months from now, 1 year from now. It's like saying to go from Bangalore to Mysore, first I have to go to Ramnagara, and then after that it's Maddur, and then Mandya, Srirangpatna, so on. Same thing. 3 months, 6 months, 1 year, 2 years, 3 years. And how are you going to go? You come up with all those ideas saying that, oh, we will advertise, we'll do digital marketing, we'll promote it on Facebook, we'll have stall in one of those exhibitions. Great, they're all ideas. How will that decision going to impact the bottom line? For that, you need to understand numbers. And this is what we look for on your business plan in the finance section. Most of you have given those Excel file. I would like you to further revise it from this perspective. Now, in the last 8 to 10 years, I've been playing this game of educating people on the subject finance. And I had the opportunity of meeting many highly successful business owners, entrepreneurs, sometimes few billionaires, and I've seen how they have gone about making decisions. And what I have understood is, end of the day, top decision makers, they would like to know three things at any given point in time. The first thing is they would like to know, where is my company? Where is my business from finance perspective? Second thing they would like to know is, why are we still here? And the third thing they would like to know is, the decisions we made yesterday, the decisions we took today, and the decisions we're planning to take tomorrow, will it help us to go from here to there or here to somewhere else? And this is what we would like to see on your financial section on the business plan. So 3 months from now, 6 months from now, 1 year from now, 3 years from now, where do you see this business? How much sales are you doing? What are all the expenses? How are you going to get there? And finally, what is the leftover? Now, let us look at how this gets presented. Now, before I continue, are there any questions at this stage? Are we good to continue? If we are good to continue, then please give me a thumbs up or a yes in the chat box. Okay, thank you. Okay, I've got only 3 yeses. I'm not sure how many more of you are still in front of.
Students, it will be very encouraging if you respond. Oh, great. Lovely. Thank you so much.
Okay, thank you. Good to know. So let's continue. Now, let us try to understand the finance by taking this as a simple example. Let us say you decide to have a coffee stall, like a mobile coffee stall. Now, to start this business, to start this venture of yours, what are some of the resources that you would require? Now, you can type it in the chat box, or you can unmute yourself and answer this question. So what are some of the resources that are required to start this mobile coffee shop?
The proper location, like where people engagement will be more.
Okay, so you would like to know where you want to position this or have this particular stall location. Okay, great. What else would you like to know? And what are the resources that you would need? So Jayanta is saying, set up knowledge about making coffee. Person who makes a good coffee. Okay. Water, milk, coffee powder, and such other raw materials. So now we are talking about the ingredients. Okay, great. What else? Accessories like raw materials. Yes.
There is a secret recipe which is actually making my coffee different than others.
Or maybe having that USP, no, unique selling proposition which has got the unique taste. You can brand it, you know what, the taste of this, so that people can talk about it. Great, thank you for sharing that, Setu.
Creating best way to do that with less time.
Creating.
So I can offer more.
Okay, so
basically creating
systems, process. Okay. So
finding the best place where your coffee will be sold more.
Okay,
so
the
more coffee lovers will be there.
Great. Okay. And someone has typed in saying person who knows the maths and pricing. Okay, that's good. How about the coffee machine? How about this vehicle or whatever you want to call it? We need that as well, right? That's the main fundamental thing that we need before we can even make coffee. See, this is how I would like you to look at your business plan or the idea that you have come up with. Because if you don't consider all of these resources, then eventually you will have to buy it. If you haven't mentioned it on your business plan, suddenly, let's say it takes 1 lakh to have this ready. Where will you go and find that 1 lakh? Now, I understand if it is 5,000, 10,000, few rupees here and there, then you might say miscellaneous and unforeseen expense and you can add it. But substantial things, resources cannot be ignored. And this is where you have to clearly understand what does it take? What are all the resources that are required? Now, good to see that quite a few of you have mentioned things like the uniqueness and marketing and location and things like that. Now, I want you to understand this thing before we continue understanding the financial statements. And that is, let us say this is you, who is going to be a busy startup founder running from one end to another, making sure that you're taking care of marketing, you're taking care of your customers, you're taking care of selling, you're taking care of finance, you're even taking care of all the cleaning work. You're like that all-rounder. If you ask a startup founder, they will say that I had to do everything. I was like that all-rounder. I was always busy. And let us say this is your business or a startup. The first thing that I would like you to understand when it comes to even opening a financial statement is you are not your business. Now, you might have co-founders with you. Doesn't matter. Make sure all the co-founders, business owners are treated separately and the business is treated separately. 2 reasons. First reason is those 4 financial transactions. Do you remember? Can someone quickly repeat what are those 4 types of financial transactions? Now, please unmute yourself.
Money comes in, money goes out.
Yes.
Supposed to come in and supposed to goes out.
Great. Thank you, Zaid, for answering that. Now, whenever these 4 financial transactions happens, it gets recorded, right? And it is always recorded from business perspective, not from business owner's perspective. Most of the time, people get confused. I'm not sure if you have made an attempt to look at a financial statement. Many times, people get confused when they're reading a financial statement is simply because they're trying to understand it from business owner's perspective, but it is actually prepared from business perspective. The second reason is, now let us say there is a newborn baby. And if you go and ask the parent, which is the most beautiful baby in the world, what do you think the parent will say? Of course, my baby is the most beautiful baby in the world. Because there is so much of emotional connection between the parent and the baby. But imagine an arrogant man like me, I will look at the baby and I go, ooh, that's an ugly baby. How do you think the parent will feel? They'll feel hurt, they'll feel sad, and they'll be really disappointed, and there'll be a lot of anger. They'll not take it with right spirit. Because again, there is so much of emotional connection. Unfortunately, many a times we bring in the same emotion even to our business idea, to our business, to our startup. And we say, this is my business idea, this is my startup. This is the most beautiful baby in the world. And what do you think your coaches, consultants, well-wishers, and the market, the customers, they might say when you take it to the market, they go, oh, I don't like that idea. I don't think I'll buy your product or service. Probably this is what happened last week when you were pitching and then the jury was giving their comments. Most of you may not have taken it. If you felt a bit hurt with whatever the jury had to say, then I'm afraid you are too much emotionally connected to your business idea. So learn to detach and say, hey, this is me, business owner, startup founder, whatever you want to call yourself, and this is my business. Collectively, how can we make sure we can grow this business? Now, business startup has to be used as the vehicle. This is the vehicle that will take you from here to there. A vehicle will take you from Bangalore to Mysore. Same thing, this is a vehicle. How can we make sure we build this vehicle so that we can take it from revenue 0 to revenue 1 crore or 10 crores or 1,000 crores, I don't know. Now, looking from business perspective, I asked you what are some of the resources. You said many things, ingredients, raw materials, way to have this location, so on and so forth. All of those can be brought under 2 headings: financial capital and intellectual capital. Financial capital is all about how a business will go about bringing funds, borrowing funds, and how will it use it and manage it. Intellectual capital is all about the know-how. Someone said, how can I make sure my coffee will be better than the other coffees in the surrounding area? Or which is that location where most of the customers are there? So the know-how, knowing how to position this, the marketing, even knowing what kind of suppliers, where to procure or buy those coffee powder, milk, sugar, so on and so forth. So looking from business perspective, it is taking financial capital and intellectual capital, and either it is selling a product or a service or both product or service. So broadly speaking, only 3 types of businesses, Business that makes money by selling or pretty much taking a raw material, converting it to a finished product and making money by selling that finished product. Business that makes money by offering some kind of a service, and business that makes money by selling a product and offering service to that particular product. Doesn't matter what type of business idea that you have got, whether you're selling a product or service or both, the aim of the game remains the same, and that is to make sure you are selling your product or service for more than what it is costing you. For that, first we need to know what is that we are selling and for how much we are selling. Because in some of the business plan that we received, it was very difficult to understand how are they going to make money? What is that they are going to sell? So now I have got a question, and I would encourage more than half of the participants to answer, if not all. I would like you to answer this question. How will your startup make money? In one sentence, I would like you to type in saying that my startup will make money by selling. What is that you're selling? Or let me help you here. Fill in this blank or blanks. If we are paid rupees, whatever it is, by our customer, we will give them dash. For example, if you pay me 300 rupees as a customer, I will be giving you a copy of my book. If you pay me, let's say, 10,000 rupees, I will give you access to my online program. If you give me, let's say, 50 rupees, I'll give you a cup of coffee. So which means there are 2 things that I would like you to answer. What is that price at which you're selling your product or service? Is it 5 rupees, 10 rupees, 50 rupees, 1,000, 10,000? I don't know, 3 lakhs? Because some of you said you want to manufacture some kind of a machine and equipment. So if that is the case, what is the unit price, the selling price? And what is that you're going to give to them? If you're struggling to answer this question, then I'm afraid you'll have to seriously think about your business plan.
So yeah, shall I answer it, sir?
Yeah, please go ahead.
So at the starting, you don't need to pay me anything. So only when you get the job, you need to pay me some sort of commissions. Yeah. So this is how we propose for our customers. At the starting, we don't charge him anything. Yeah.
Okay, so in this case, you're saying that if we help you get a job, then you'll be paying 2% or 5% of your salary, first salary.
Yes, exactly.
Okay,
Yeah.
good. Business plan 168 is saying 15,000 septic tank. So if someone pays them 15,000 rupees, they will give them a septic tank. Good to know. 121, Prasad is saying we'll give them rent, lease, goods, used bike. Prasad, I'm afraid I'm not able to understand what is that you're selling.
Sorry. Let me explain. We will be either giving him a used bike or rent. If you want for around 1 to 2 days or 6 months, we will be renting that same bike. He wants the bike for intermediate tenure, we will be leasing that same bike. So we would be.
So per day, how much is the rent?
Per day around 160. Let's take one Bajaj Pulsar 150.
Okay, fine. So which
with 200 kilometers.
Fine. So that means in your case, you'll have to be really on top of numbers because your selling price will keep changing.
Yeah.
Because you'll say, if you pay us 160 rupees, we'll give you Bajaj Pulsar for 1 day. If you give us, let's say 500 rupees, then we'll give you Bajaj Pulsar for 1 week. If you give us, I don't know, 3,000 rupees, we'll give you Bajaj Pulsar for a month or something like that.
Yeah.
Okay.
If you give 35,000 rupees, we'll lease that for 3 years. And
Good
you'll
to
be paying around 200 rupees subscription fees per month.
Good to know. Good to know. Now, Zaid is saying if we are paid 2,800 rupees, we'll give them our water saving device. Okay, great. See, this is something that you need to be very clear. And no, Sanjeev sir mentioned about that elevator pitch. And this is something that people would like to know. What is that you're selling? How will your startup make money? Now, once you know, okay, this is what we are going to cost, or this is what it will cost, then the question is, who are those people who are ready to buy? And then you'll have to think of marketing, and that is how it comes. Okay, let's continue, as I'm afraid we are running out of time and I've got quite a few things to cover. Now, when it comes to financial capital, business borrows. The key word is it borrows from 2 types of people, insiders and outsiders. Insiders are you, startup founders. And this is where some of the time people go, Chinmay, what do you mean my business is borrowing from me? Yes, your business is borrowing from you because you are not your business. So this is where I mentioned that you have to treat yourself separately and your startup separately. So insiders are business owners, your business partners, your investors, and the 3 famous Fs, family, friends, and fools. So these are the people, insiders, who take a share in the company. Outsiders are predominantly from a financial institution like a bank. So whenever business needs money, it wants to borrow, it is either borrowing from insiders or outsiders. Now we know business will not always borrow money. Sometimes it will borrow raw materials and services. Going back to that coffee example, mobile coffee shop example, when we buy the ingredients, the coffee powder, sugar, so someone will be supplying it regularly. Do you think they will ask for the money immediately? Most of the time they will not. They will give an invoice saying, here is probably 10 kgs of coffee powder, pay me after 7 days, pay me after 1 month. Now that is known as credit term. Money supposed to go out. Now someone mentioned they sell septic tank. Now if they have to manufacture that septic tank, they'll have to get some raw material, and someone is supplying them raw materials. Now that raw material supplier will not ask for the money immediately. They will say pay us after 30 days or 45 days or 60 days, depending on how you have negotiated. So now business has not borrowed money, but it has borrowed its kind. It has either borrowed raw materials or service. Now Prasad mentioned about hiring the bike. For that, he needs to have an online platform, a website, definitely an app. So there will be someone who will be developing an app. Let's say he has outsourced it to a company. So now that company will say every month you pay us 50,000 or 1 lakh, depending on whatever the charges that they have negotiated. So it is borrowing the service for 1 month. Now business again takes those resources. It is either selling a product or service or both product or service. So now let us see how this gets recorded on something called as a balance sheet. This is one of the financials. So whenever people refer to financial statements, there are 3 types of financial statements. One of them is balance sheet. As I said, business owner has to be treated separately. Business has to be treated separately. Business borrows money from insiders and outsiders. Let us see where and how it gets recorded on a balance sheet. Do you know the 2 main headings on a balance sheet? If yes, please type it in or answer by
Assets
yes.
and liabilities.
Correct. You got it right, Prasad. So the 2 main headings on a balance sheet are liabilities and assets. Now, I'm not a huge fan of using those accounting jargon. Liabilities, in other words, sources of funds. Where has the business sourced its money? Now, business has sourced money from insiders. Insiders' money is known as capital. If it is more than one, they'll be sharing the capital. Outsiders' money, what do you call the money when you borrow from a bank?
Loan.
What do you call?
Loan.
Exactly, loans. So money from insiders are called as capital or share capital. Money borrowed from outsiders are called as loans. They are sources of funds. It comes under liabilities. The reason it is called liabilities is business is liable to pay the bank. Business is liable to pay back its investors sometime in the near future. Okay, business has borrowed money or sourced money. What will you do with it? Assets is nothing but uses of funds. In that mobile coffee example, we will buy that particular vehicle, we'll buy a coffee machine, we'll buy those utensils, fixed assets. We'll buy that machinery, we'll buy office furniture, we'll buy a laptop. Uses of funds, assets, they all come under fixed assets. Now, there are certain liabilities, certain assets that we will not be using it on a long term. For example, under liabilities, we discussed in the previous slide, it is not always money, it will also borrow raw materials and services. Though they get recorded under current liabilities as payables. Current liabilities. Currently, business is liable to pay someone within the current financial year. When does the financial year start here in India?
April.
1st of April, ends on 31st of March. In countries like US, it starts on 1st of January, 31st of December, it ends. In Australia, it is 1st of July. Now, it doesn't matter. Every country will have its own financial year. In that financial year, if something has to be paid to one of our suppliers, vendors, or to someone, then that gets recorded as payables, current liabilities. Money is supposed to go out. Similarly, under assets, we have current assets mainly made of 3 things. Debtors are none other than receivables from customers. So let us say now Prasad, he will be renting out the bike. Now, I'm not sure what their model is, whether they take money first and then rent out the bike, or pretty much they say pay us 20-30% advance and then pay the rest 70% later. If it is the second one where the customer is paying later, then they would be recorded under debtors, receivables. Money is supposed to come in. Again, someone mentioned about the septic tank. So after pretty much giving them the septic tank, the customer may not pay immediately. They'll say, give me 15 days time or 30 days time. Money is supposed to come in under debtors as receivables. Inventory, mainly in manufacturing businesses or even in that mobile coffee shop, raw materials like coffee powder, sugar. If it's in the storeroom, then it would be under inventory as raw materials. If you have already manufactured something, the end product, then that would be again under inventory as finished goods. Finally, cash in hand, cash in bank. When it comes to balance sheet, these are the main headings and subheadings that one has to understand. Of course, if you open a real life balance sheet, you might think there's so many transactions. Please don't get overwhelmed or scared. All of them, either it will be a liability or an asset, and accordingly, it will be categorized and subcategorized. Any questions so far, or are we good to continue? I'll probably take that silence as an X. Yes. Umesh sir, just quickly wanted to check with you. Is it okay if I stretch by another 10 more minutes?
Sir, no issues.
Okay.
Yes,
No
please,
issues.
you can carry on, Chinmay. Because
Okay.
we have time. See, actual time was given till 4:30, and from 4:30 onwards is question and answer. So you have enough time.
Okay. Good to know. Good to know. So in that case, I'll be encouraging you to ask questions. You don't have to wait till the end of the session. So that's why I'm making sure each and every part, if you've got any question, you can ask, or else I'll be more than happy to revisit any slide. So let me continue. So this is balance sheet. The reason balance sheet is called balance sheet is because the total liabilities, whatever that number, let's say it is 10 lakhs. If total liabilities is 10 lakhs, then even the total assets should be 10 lakhs. Which means the total liabilities and total assets has to be same, which that is when they say balance sheet has balanced. So all the sources of funds, we know where it is being used. If it is not used, then definitely it will be sitting in the bank as cash. So we know where it is. Now let us look at profit and loss statement. Now, what are the two main headings under profit and loss statement? Who would like to answer this? Do you know the two main headings under profit and loss? Don't say profit and loss. So when you sell your product or service, money comes in. What do you call that?
Credit.
Okay. Some missing costs and revenue. See, of course, you're all right in your own perspective, but again, I don't like to use all those jargon. It is simply expenses and incomes. Incomes, money comes in. Incomes, money comes in. Expenses are outflow of money when money goes out. Now, can you give me some examples of expenses that you might incur in your startup idea? So what are some of the expenses?
Service and maintenance.
Yes,
Sourcing
service and
bike.
maintenance.
Manufacturing.
So can you break it down when you say manufacturing? So who will be manufacturing it?
Workers,
So what is that you pay them?
machineries,
You pay them
Salaries.
salary, you pay them wages. What else?
electricity,
Electricity. So all the utility bills, electricity
Rent.
bill, gas bill, water bill. Yes,
Rent.
you will also have to pay rent if you're hiring an office space or a manufacturing space. Here are the raw materials that you will be consuming. Advertising, marketing. So all of this. So
packaging, transformation,
sorry, what was the Jayanta?
packaging and transformation.
Exactly, logistics, courier charges, transportation, fuel. And if you have borrowed money from the bank, you have to pay monthly interest. So all of this will come under expenses. Outflow, money goes out. Incomes, mainly it would be under sales. So if your business is making money from its core business activity, then we call it, we record it under sales. The reason I'm so specific is simply because there are times when your business might also make money outside your core business activity. In that mobile coffee example, because let's say we are going to have it in front of a college, or we are going to have it in front of a corporate office. So morning we might be in one location, afternoon we might move that vehicle into another location. If someone decides to advertise, then again money comes in, but that should be recorded under other incomes. If we decide to sell that vehicle and then buy a new one, Again, we are selling that vehicle and getting money. Money comes in, right? It should be recorded as other incomes. So clearly you should break it up and say how much money will come from your product 1, product 2, product 3, and are you also going to make money outside your core business activity like other income 1, other income 2. This is what we need to see. Don't put everything in under one bucket. We need to see that categorization, and it will definitely help you further as well. Now, what is that a cricket coach or any sport coach will do after the game is played? They will look at each and every action that happened on the field, which means they're analyzing, looking at the statistics. So which means they're dissecting, and then that is how they help the player to improve. Same thing we want to see here. How much money did you make from product 1, product 2, product 3, expenses? How much was paid to your frontline workers? How much was paid to the people in the office? Everything has to be clear. Now, simple definition of profit on a profit and loss. There's income minus expense, and you have got the profit. Now, let me introduce some jargon here. Sales is called top line. Profit is called bottom line. Now, which do you think is more important? Top line or bottom line? Is sales more important or is profit more important in a business? Type it in the chat
Depends.
box. Depends. Okay, that was not an optional answer.
Bottom line, sir.
Bottom line, okay. Yes.
If you
Business is all about bottom line. I understand there cannot be a bottom line without a top line. The point I would like to make here is don't just get excited with any sales. We should be interested in only those sales with those profit margin, with those credit term that is going to have a positive impact on profit. What is the point of just increasing sales if it is not having a positive impact on profit? Well, of course, if you are in the game of valuation, then you have taken millions and billions from investors and you're burning that cash because you want to create that monopoly and you want to increase the valuation of the company, then yes, it's a different ball game. But at least initially, you should make sure business is going to make some kind of a profit through the sales. And how will we know whether a business is making profit? By recording numbers, by understanding how much each and every activity is going to cost. The moment you start renting a property, clock starts ticking. Whether there is night curfew, whether it is lockdown, you eventually will have to pay. The moment you borrow money from a bank, you have to pay interest. So money never sleeps. The moment you want to advertise, digital marketing, whatever, pay-per-click, you want to put flyers, everything is going to cost. Every activity has got some kind of a cost associated. The question is, do you know that? Are you aware of each and everything? This is where you have to break it down. And for that, we need to understand a term called as contribution. Let us see what that is. Now, expenses, costs, we are further dividing it or categorizing it as variable cost and fixed cost. Variable cost, the name itself is saying it varies, which means 1 month it might be more, 1 month it might be less, depending on sales, which means any expense that is directly related to sales in making that product or servicing that product is called variable. It comes under variable. For example, in the coffee shop, raw materials like coffee powder, sugar, milk, they're all variable expenses. The more coffee we make, the more coffee powder will get consumed. It varies along with sales. Fixed cost remains fixed. Rent, fixed. Salary to a great extent is fixed. Utility bills, again, to a great extent, it is fixed. Interest, if we have to pay to the bank, fixed. So we have got variable cost, we have got fixed cost, and that is what we would like to see even in the breakdown on your business plan. How much of it is variable, how much of it is fixed. Some of it will be partially variable and fixed, so don't overcomplicate it. If you're not sure, it's all right. You can put it under fixed cost for the time being. Simple definition of profit is sales minus expense. Now we are dividing or categorizing expense as variable and fixed. Contribution is sales minus only the variable cost. Now, profit becomes contribution minus fixed cost. Which means we have sales minus variable cost will give us contribution. In other words, if you take all the products that you're making, and if you know how much it is going to cost you to make those products or sell that particular product, it will give you gross profit. Contribution is a term used for 1 unit. For example, with Prasad, he should know what will be the contribution if people are hiring the bike only for 1 day. If they are hiring for 2 days, 1 week, 1 month, again, he should know how much it is going to cost, how much the cost will vary, and what will be the gross profit. So if an investor is asking what is the GP margin, they're referring to this. They want to know, do you know how much it is going to cost? Let us understand this better by going back to that example and looking at numbers. So let us say you're selling that 1 cup of coffee. It's a very unique coffee, and you have that marketing behind it saying coffee beans are procured from whatever hilly stage. I don't know. You come up with that story, you make it special. And if you're selling 1 cup of coffee for 250 rupees, and if it is going to cost you to make that cup of coffee 100 rupees, that will be your variable cost. Contribution is sales minus variable cost, 250 minus 100, which is 150. Let us say fixed cost, like your rent and salary, whatever it is, which will always remain fixed, it is 10,000. So if you're selling only 1 cup of coffee, business will make a loss or a negative profit of 9,850. What do you think will happen if 2 cups of coffee is sold? How much will be the sales if 2 cups of coffee is sold? You can type it in the chat box, or you can unmute yourself. If 2 cups of coffee is sold, how much will be your sales,
500.
your revenue? Yes, it would be 500. What will be the variable cost? 200. So variable cost will vary. The more cups of coffee you make, the more raw materials, ingredients will be consumed. Now contribution will become 300. How much will be your fixed cost?
10,000.
Exactly. Fixed cost will remain fixed. Now the loss has reduced to 9,700. In fact, I would have given you some time to do this calculation. As we are running out of time, let me give you the answers. If 3 cups of coffee is sold, then it would be 750. Variable cost will again vary by another 100, so it will be 300. Contribution is now 450. Fixed cost will remain fixed. Now the loss is 9,550. If it is 10 cups of coffee, 2,500 would be your sales. The contribution would be 1,500. Fixed cost will remain fixed, and business will be making 8,500 loss. Now, as a startup founder, as a business owner, what is that number that you would like to know? So you have all these numbers, but what is that one critical number that you would like to know? Exactly. You would like to know how much coffees am I supposed to sell so that we hit the break-even number, where this, which is in red, becomes 0 and start then becoming green. Break-even point. The reason business is making a loss in the previous example is because contribution is less than fixed cost. Yes, contribution is less than fixed cost. That is why business is making loss. So whenever contribution is less than fixed cost, business makes a loss. Whenever contribution is equal to fixed cost, that's when you hit the break-even point. When the contribution is more than fixed cost, business starts making profit. Again, to know this, we have to understand numbers. At what price are we selling? How much is it really costing us to make this particular product or service? What are all the fixed costs, and how much are we supposed to sell? Numbers, 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 numbers. To calculate the break-even point, the simple formula is fixed cost by contribution divided by contribution per unit. How much was the fixed cost? 10,000 rupees. How much is the contribution per unit for 1 unit? It was 150. 50. So 10,000 divided by 150 is 66.66, which means when the 66th cup of coffee is sold, business is still making a loss of 100 rupees. When the 67th coffee is sold, it starts making profit of 50 rupees. And then it increases. So again, on your business plan, we would like to know, what is this number? How long will it take to hit this number? Can you achieve it in the next 3 months, 6 months? I don't know. Again, this is, at least have you even thought about it? Have you done some kind of a working? This graph will help you understand it better. So let's say this is variable cost and this is fixed cost. Variable cost plus fixed cost is your total cost. And let us say this is sales. So more sales we do, more will be the variable cost. This is the portion where business is making a loss. Initially, it was 9,000, whatever, 850. And then you started selling more and more cup of coffee. When that 67th cup of coffee was sold, business hit the break-even point. After that, business starts making profit. Now I use green screen, so I cannot have anything green, otherwise it becomes transparent. That's why it is in blue. But this blue patch is where you can see it is becoming bigger and bigger, wider and wider. So now I have a question for you. Ideally, should we aim to hit or achieve the break-even point earlier during the month or later during the month, or it doesn't really matter? So break-even point, should we aim to achieve it faster or later, or it doesn't even matter?
As soon as possible.
Exactly, as soon as possible. Because if the break-even point, let's say if you're achieving the break-even point on 25th on an average of every month, you're left with another 5 more days. Before that, again, you start from zero because you have got your fixed costs. But if you're achieving the break-even point, let us say on 15th of every month, you're left with another 15 days to leverage and make more profit. And effectiveness is, how can I make sure that 15th day becomes 14th day, 13th day? For that, again, we have to look at numbers, analyze it. So let us now look at a breakdown of profit and loss statement. Top line sales, let us say it is 1 lakh. What do you think will come after that? After sales, to whom do you think we should be paying? Or probably let me ask you that question. Who are the people who would like a share of that 1 lakh? You have sold 1 lakh cups of, or not cups of coffee, you have sold coffee and you have made 1 lakh. You haven't paid anyone. So who are all the people that you would have to pay, or you should be paying?
The founders.
The founders. Okay. So
Investment. Upcoming investment.
Founders. When you say upcoming investment, I didn't get that. So someone has typed in employee. Yes. Who else needs to be paid? Founders. I'll put investors also here. Rent.
Expenses.
Sorry, what was that?
Expenses.
So expenses. So can you break it down? Or shall we say, let's say this is a variable expense, and let's call it as a fixed. Sorry, this is fixed expense, rent and everything.
Repayment of loan.
Variable expense. Okay, everything will come under expenses. So banks, yes, we'll have to pay bank the interest. Who else? Vendors. So pretty much people who have supplied raw materials. So suppliers, vendors. Anybody else? Marketing, operations. Well, we'll kind of put them under expenses. Who else would like to have a share? Taxes, exactly, the tax man. You have to pay tax because they say, hey, we are providing you this kind of an environment which is safe. We give you water, we give you all those back-end things we take. So we would like you to give us some share of the profit that you would have made. So even tax needs to be paid. So we have A, founders, we have B, fixed expenses, we have C, variable expenses, we have D, banks, we have E, vendors and suppliers, and we have F, tax. Who should be paid first, looking from a profit and loss statement perspective?
Employees.
Expenses.
So which expense, variable or fixed?
Variable.
Okay. Employees fixed. Okay. After, let's say, variable, who else needs to be paid after you pay your variable expenses?
Suppliers.
Some of you are saying loans, some of you are saying suppliers. Okay. Who else would
Taxes.
need taxes? Do you pay tax immediately after paying them, or do you have to pay others? Someone is saying tax at the last. As we are running out of time, we will have them. After fixed expenses, you will pay bank interest, and then you will pay tax. And finally, even though you mentioned founders needs to be paid, they are the people who will be paid at the end. Let us understand it better in this simple breakdown. So sales minus variable cost. Of course, in this variable cost, it includes the suppliers as well. Sales minus variable cost will give us gross profit. Gross, putting everything together, whatever you're selling, how much is the profit business has made, GP. When you convert this into percentage, it would be 60%. And this is something that an investor would like to know, or in this case, the judges, the jury would like to know. What's your gross profit margin? Then you pay your fixed cost or operating expenses, your rent, the salary, utility bills. This will give you something called as EBITDA. I'm sure accountants might have used this if you have spoken to them. Now, if you haven't heard this, don't get too overwhelmed. It is earnings before interest, tax, depreciation, and amortization. As I said, please don't get overwhelmed. Let us look at D and A, depreciation and amortization. Now, you mentioned all of this. Now, to make a cup of coffee, definitely we will need a coffee machine, right? Now, the question is, when you have bought this coffee machine, how can we associate a cost? How can we associate a cost so that we know how much it is going to cost us to make a cup of coffee? And the answer is, or the method that is used is depreciation. Now, I don't want to get into the technicality of it because accountants, they do the depreciation, but I just want you to get an idea. Now, there are two types of method. One is called a straight line method, another called as diminishing method when it comes to depreciation. Like, for example, if this coffee machine was bought at 10,000 rupees, and if we can make 10,000 cups of coffee, and if we have already made 1,000 cups of coffee, how many more cups of coffee can we make using this? Another 9,000, right? So 1,000 is already made, so consumed. This is that is left. So this 1,000 in percentage wise is 10%. This is 90%. So this 10% becomes the depreciation. Now, again, I don't want you to really break your head if you haven't got this, but I just want you to know when calculating profit and loss, there has to be an element of depreciation that needs to be taken into consideration. Especially in Prasad's business, every time someone is going to take that bike, well, he might know how much fuel is being used, so that becomes an expense. But how is he going to associate a cost? So this is where the wear and tear of the bike has to be taken into consideration. So he needs to know the depreciation value. Now, you don't have to break your head. The taxation office will have depreciation value for each and every asset. If it is heavy equipment, in machines like big machines in manufacturing, they depreciate by 10 to 20% every year. If it is office furniture, they depreciate by 30 to 40%. If it is your laptop and other IT hardware, they depreciate by 60 to 70% because technology becomes obsolete. Again, I don't want you to get too overwhelmed. All I want you to understand is there has to be the depreciation value that needs to be taken into consideration. If you do not know, you may not know how to do the calculation, ask the help of an accountant. Depreciation is for tangible assets. Amortization is for intangible assets. So out of EBITDA, DA is taken into consideration. Now we look at EBIT, earnings before interest and tax, also known as PBIT, profit before interest and tax. As we discussed in that payment method, it has to be interest to the bank we need to pay. So if it is 2,500, then we arrive at PBT, profit before tax. If you remember the cricket example, we said we are here and we have to look from PBT perspective. This is what I was referring. This is the number I was referring. Profit before tax. So it is 17,500. And depending on the tax bracket, let's say it is 30%, then business is expected to pay 30% tax on 17,500. And whatever is left becomes net profit or profit after tax. And with this net profit, to whom do you think this net profit belongs to? So this 12,250, to whom do you think this belongs to?
Still depends. If I want to invest again into the business, I should invest it again.
Correct. But this 12,250 belongs to you as a business owner, you as a co-founder. It belongs to the investors. However, we can't take all of the money out of the business because, as Prasad said, we have to reinvest. If I have to grow the business, if I have to expand the business, instead of having one coffee shop, if I have two coffee shops, or in Prasad's case, instead of having 50 Pulsar bikes, now if they want to acquire 100 Pulsar bikes, then more money is required. Either if they have managed to make a healthy net profit and have cash, they can reinvest this back into the business. So that would be indirect investment by the business owner. Or again, the business has to go borrow from insiders or outsiders. Now, when Sanjeev sir said you don't have to necessarily borrow or kind of get funds from the investor, the point he was trying to make is if your business is already making a healthy profit, net profit, then you can use this money to reinvest in the business. If you are not able to generate net profit, and this is what happens with a lot of multinational companies like Ola and Uber and Swiggy and things like that, because they're spending too much of money in marketing. There is so much of overheads. So this is where they may not be able to make that money. And that's why they are always constantly knocking the door of the investors. So you need to know this so that when you are forecasting, saying 3 months from now, 6 months from now, 1 year from now, can your business fund itself? If not, again, we would like to know if the money that you're going to get 5 lakhs in this competition, if you run out of that 5 lakhs, what will you do 6 months from now? What's your plan B? What's your plan C? Are you going to go and ask for investors? Do you think investors would be ready to invest? Can you ask a bank? Or can you somehow make it self-sustainable for a while? So now let us understand what exactly is profit. Because we talk about profit, profit, profit. Let us say here is a company that has made for 40,000 in sales. So they have got a machinery for 50,000. Raw materials is 20,000. Salary is 5,000. So profit is 15,000. So you have profit and loss and you have balance sheet. Of course, here we need to know from where the 50,000 came, but let's not complicate it. Let us keep it simple. Do you think that 15,000 is the actual profit for this business? Yes, no? Or are we missing something under expenses? So we have raw materials, variable cost, variable expense. We have salary. Let us say it's a fixed expense. Let us say there was not other expenses like rent and things like that. Are we missing something, or do you think 15,000 is the actual profit?
So the administrative expense.
So let's say it's all kind of taken care. Looking at what we have.
Depreciation.
Exactly. We haven't taken depreciation into consideration. So if this depreciation, let us say, now, okay, let me take a step back and emphasize on this. All you have to understand is whenever money is going out of the business, either it becomes an expense or it creates an asset, as simple as that. If I am in a rented house, every month, end of the month, I have to pay rent to the landlord, expense. But if I have kind of taken a business loan or a home loan and I've got this house in my name, every month I have to pay the bank, and then it is going to create an asset. So whenever money goes out, either it becomes an expense or creates an asset. Now, if I want to buy a bike, I can go to a showroom and pay 1 lakh and get a bike, asset. But if I say, you know what, I don't want a bike, I want to hire a bike, I'll go to Prasad, give 100 or 500 or 1,000 rupees and I can hire, which becomes an expense. So whenever money goes out, either it becomes an expense or creates an asset. We have to understand a term called expenditure. Expenditure is a spending that either becomes an expense or an asset. So please do not think profit is only income minus expense. Profit is income minus expenditure. So that is when we have to understand the depreciation. So let us say this company has purchased machine for 50,000, raw materials for 20,000, paid salary 5,000. So it is taking all of this. Let us say it has sold furniture for 40,000. Now we have to understand depreciation, which is consumed portion. How much of that equipment was consumed? How much of that asset was consumed? This is where the taxation office will have depreciation value, as I mentioned, for each and every asset. Now the question is, how many times can this machine be used? It's like asking you buy a new car, how many times will you be using the car? You'll say it depends who the manufacturer is, how well someone is maintaining it, where it is serviced. Same thing for every asset. Now you might use a laptop for 3 years, or you might drop it and damage it in 6 months. You don't know. So same thing, but some depreciation value has to be associated. So let us say it is 5,000 is the depreciation, 10%. The equipment is not worth 50,000 anymore, it is 45,000. It's like you buy a bike for 50,000. After 6 months, you can't sell it for 50,000 because they're like, it has depreciated. So this depreciation comes under expense. Now the profit is not 15,000, it is 10,000 rupees. But let us take a look at the cash in the bank. 40,000 money came in, 50,000 money went out, 20,000 money went out, 5,000 money went out. Cash in the bank is minus 35,000 rupees. Profit and loss statement is saying business made a profit of 10,000 rupees. Cash in the bank is 35,000 rupees. Where is the money? Show me the money. So this is why we have to understand the difference between profit and money. Profit doesn't mean business has cash in the bank, it has got money in the bank. Never confuse profit with cash. Most of you in your forecast on the Excel file, you are saying we make so much sales and this is the net profit. Yes, that might be net profit, but that may not be cash. Because you might take the money in the bank and you might go and buy an asset. That is what has happened here. 50,000 has gone out to buy that machine. It is certainly possible for a business to make profit and may not have cash in the bank. And this is what has happened because of the COVID situation. Most of the profitable businesses, they were making profit, but suddenly they ran out of cash. Like one of our family business, we manufacture carton boxes. So we sell those boxes, and we have got quite a few people who like bakery and those kind of people who make these pastries for 5-star hotels. Suddenly, because of COVID, 5-star hotels did not have any people staying in the hotel. Were they profitable? Yes, they were making profit. But suddenly, because of COVID, no one is going to the hotel. They didn't have cash coming in. They were not able to pay the pastry person, and the pastry person in turn was not able to pay us for the boxes we supplied. Did we make profit? Yes. But have we got cash? No. Even the other way, it is possible. Where business might be making loss, but it might have some cash in the bank. They might have sold a property or a machine, and the cash might be sitting in the bank. So never confuse profit with cash. So if profit doesn't mean money, are we in business to make profit, or are we in business to make money? Again, the prime objective is to make profit. However, only half the battle is won by making profit. Another half will be won by generating cash. For that, there is another critical, the third financial statement that needs to be prepared, called cash flow statement. It is not something compulsory by any taxation office, and that is why most people do not prepare. And especially small to medium scale businesses, they don't even look at profit and loss and balance sheet most of the time. And they're busy playing the game without even looking at the scoreboard, thinking that they're winning. But if you really want to be effective and efficient and successful, then we need to also maintain a cash flow statement, because cash is king. So I've got another slide where I've got a list of questions. Make a note of it. These are questions that I would like you to ask yourself when you are now further revising your business plan. Before you pitch to the jury in the next round, ask these questions to yourself. What is your revenue model? Some of you have answered saying that we'll be selling this product or this service. Be very clear at what price you'll be selling, how your business will be making money, who your customer is, who is going to rent those Bajaj Pulsar bike, who is going to buy that septic tank, who is going to avail whatever service that you're offering. When do you start to sell? Now, before Prasad starts selling, they might have to spend 3 months or 6 months developing that particular software, that platform. So it might take 6 months before you start making a revenue, but you'll have to pay these people, pay the developers. So when do you actually start selling? Is it next month? Is it after 3 months? Do you have something that is ready, or is it still in an idea stage where you have to come up with the MVP, minimal viable product, and then go and find someone who can manufacture it and then start selling? Any development activity, as I mentioned? Are machines required? If yes, where will the money come from? What is the cost of such machines? Where will you keep that machine? In that case, are you going to rent out a place? How will you pay the advance to the landlord? Who is going to take care of it? Watchman, security camera, employees, cleaning, all the expenses will follow. When to buy that machine? Is inventory required? If you are going to buy inventory, from whom will you be buying the inventory? How much credit term will they give you? How much will you be buying? If I buy too much of coffee powder and beans, and if I can't sell it, then there will be a lot of wastage. So are you going to have raw materials that are perishable? Can you store it? If you're going to store it, where will you store it? Do you have enough warehouse space to store it? Ongoing costs, water, electricity, rent, all the overheads, all the fixed costs. What are all those? Have you taken each and everything under consideration? One-off purchases, like if you want in-house team, and this is what investors would like to see. Investors will not be comfortable if you say we have outsourced that development to some company. They say, then what if the company closes, or if they leak the information? We want everything in-house. So you might have to go and find a team. Before that, they will say, no, what is that you're going to pay me? You have to, and what are all the other facilities you're going to give? Office furniture, laptops, and if they're working from home, again, they will have many other things that they will demand. Have you considered that? How about other costs? Advertising, marketing, admin, office expenses, accounting, legal, to set up if you have co-founders. Have you got those term sheet? Things signed? Have you got any lawyer who has looked into it? Is everything black and white clear? Have you registered the company? When will you start hiring people? Before hiring, do you know what each and every person will be doing? Have you got the tasks clearly defined? Do they know the responsibility? What kind of people are you going to hire? Where can you find them? Are you going to go and find an agency who can help you? Then they might, I think someone mentioned, no, we will help you get a placement and then you pay a commission. So they will be asking for a commission. So what is that? How is that you're going to work around with that? How many will you hire? And with all these uncertainties, working from home, coming to office, not able to travel outside the city, how can you manage that if you're trying to sell something in other tier 1, tier 2 cities or in other places? When will the business make the first rupee? This is very, very critical. When will it start generating revenue? Until then, how will you sustain? If it's for the next 3 months, 6 months, how will you sustain? How will you keep the show going with zero revenue? How much money is needed till the business starts making money through sales? Here are all the critical questions that I would like you to ask yourself before you present in the next round. So this is what is expected in your business plan, your estimated cost per unit, selling price. Some of you are clear, but I would like to know your variable cost so that you know your contribution margin, the sales forecast, including the 3 profit margins: gross profit, operating profit, net profit. And we want it 1 to 3 years. At least definitely for the first year, we want a breakdown of it. And second and third, more or less, don't just increase sales by 10%, 50%. If that increases, even your variable cost increases, and you might have to buy more assets. Again, you'll have to show and then tell us where the cash is going to come from. Now, cash flow forecast is not something compulsory, but if you can do it, if you're really, really serious about the business idea, then you can't miss this. Eventually, you will have to do it. The question is, are you going to do it now, or are you going to do it whenever it becomes kind of an emergency? So pretty much this is what I wanted to share with all of you. If you have got any question with regards to finance or in general, we have got Naume sir, Sita Devangi and JP sir with regards to the business plan, then yes, I think they will be able to answer as well. So this is what I wanted to share with you today. I hope you have got some understanding about finance, and at least you will start looking finance from a different perspective. Happy to take any questions.
Thank you very much, Mr. Chinmay Ananda. It was exhaustive and made very, very simple for a layman to understand, is what I can simply put it as. I'm sure students would also agree. I'm sure it was also an eye-opener for all of us to, many aspects which they might not have thought about were brought to light, is what I can say. And it's open for question and answering. Any of you, please feel free. It's okay, even if you feel it could be the silliest question. There's nothing silly about it. Please ask. Any stage for this, and the main person for this workshop who has curated this so well and brought us all together, requesting everybody to give their time and come prepared and deliver the session. That's the chairman for this workshop, that is Jayaprakash Nagathihalli, who deserves applause. Let's give a big.
Thank you. It's a team effort, and I do applaud Chinmay. It was not some understanding, it was really a better understanding and great understanding, Chinmay. And we have experienced 2 best presentations today. Both were presented very well with their vast experience. And I think they have cleared most of the doubts of our participants today. And Chinmay, it was a very nice and interactive session. And I also thank you, and along with Mr. Sanjeev Sukumaran, who spoke about marketing with a soothing voice, and he has highlighted the word articulating. And he has also mentioned the difference between sales and marketing. And Ms. Asita Devangi, I thank you also, along with all the jury members and knowledge workshop committee members, along with the Manthan committee and the whole of FKCCI and FKCCI staff headed by Mr. Umesh. Thank you, Asita, for supporting me in this journey.
My pleasure, sir. My pleasure. All the best, students. We would like to, see you all come prepared, charged, and we are looking forward to see you. And Jayaprakash sir, thank you for this opportunity from my behalf also. And yeah, we would like to thank